For the Nifty, nothing much to incrementally talk about except for the fact that it's 10,785 currently for the Nifty. Bank Nifty holding up steady. It's come off a little bit from the day's high, but nothing really to write home about. It's still holding with a gain of around 0.7%. Second day running that the advanced decline ratio has been as steady as it seems at this point. So 2:1. Yesterday, the close of the advanced decline ratio was very steady. So let's see whether we manage to narrow or sustain these levels at this point. But let's shift focus towards the macros now. We have a couple of economists who are joining in. We have Mr. Soumya Kanti Ghosh, the Chief Economist Advisor at State Bank of India, Devendra Pant, Chief Economist at India Ratings, joining in to discuss the macro setup. Soumya as well as Devendra, thank you very much for joining in. Devendra, I'll start with you. The press conference last evening by the RBI governor, where he did mention that, inflation is currently benign. And the numbers seem to indicate that as well for the CPI for November. It was sub 3%. What's your sense now? When exactly could we probably expect a change in stance from the Reserve Bank of India and maybe even a rate cut?
Inflation has surprised on the downside. The expectations were that once MSP hike comes into the picture, they will be pushed to inflation, but that hasn't happened. In fact, what we are seeing, the market prices are much below the MSP for many Kharif crops. So that is out. The second, the crude has eased off considerably from somewhere around mid-80s to around hovering around $60 a barrel. The currency has appreciated compared to where it was a few month and a half back. So that is reflecting in the CPI inflation. Now coming to the policy implication, right? Inflation is below 4%. As of now, if we look at the near-term trajectory, the chances are that it will remain benign, because as we enter in the winter season, we see the price of fruits, vegetables coming down, and that has been there historically. So there is a causality. So what we believe, the first there will be a change in the monetary policy stance from calibrated tightening, which they had adopted in August policy, continued in the October policy. So the change in stance from calibrated tightening to neutral, and post that there could be a rate cut. Chances of it can go any way, like change in stance and cut. But we believe first there will be change in stance, followed by the cut. Now, major factor to watch out for RBI when they will be conducting February monetary policy, that they will have the central government's revised estimate of fiscal deficit for FY19, and that will have a major, according to us, major bearing on what decision RBI takes in its February monetary policy.
Okay, the long and short of it, what Mr. Pant is saying is that initially we will see a change in stance, followed by a cut in actual rates. Mr. Soumya Kanti Ghosh from State Bank of India is also with us. Mr. Ghosh, let's stick with monetary first before we start the discussion on what can be done on the fiscal side. What's your sense? Because, you look at what's happening in equity markets and how stocks are being bid up across the board. Hopes are running high. Are they rooted in reality? What's your sense?
No, I think the fiscal has been, and also the monetary policy has been unusually tight in the last couple of years. And getting to a 3% fiscal deficit, and given that growth considerations weak now, remains a significantly challenging task. So fiscal deficit, which has been set at 3.3% this year, I think it will be difficult to meet. But as of now, we are keeping our fingers crossed to see what is the final number, what is the revised number, at least in February, what the government comes up with. But my sense is that given that all the leading indicators in November is showing a trend which is actually in the negative territory, oil consumption is now at a significantly low levels. If you look at the oil consumption of diesel, kerosene, LPG, everything has declined in November, so as the passenger car vehicle sales. So automatically this will translate into an lower RRP number and also and lower growth numbers for Q3 and Q4, and that is actually a matter of more concern to the market right now rather than the fiscal deficit and the other allied things.
No, but what should we expect? I understand all of that, but I'm saying, are these hopes? Because markets are rising and financials are doing very well because they believe that we will probably see much easier liquidity conditions.
Absolutely. So basically, I mean, see, we are actually estimating that the incremental, there should be the liquidity which was at the OMO, which was at 40,000 crore per month. I think from January to March, this number could actually go up to maybe around 50,000 crore per month. So that is one thing where the markets are actually rallying. The other thing is that you could actually see some sort of an steps being announced so as to alleviate some sort of a rural stress which is happening in the economy. And that actually could be growth positive.
Soumya, I just want to come in on that point. What is the first and primary step you probably expect, say, from the government's table to alleviate the kind of pain that we're seeing in food prices?
I think the first thing is that the concern of MSP being translated into higher food prices have not rolled out, because as we had also said earlier, the procurement of with only 6% of the crops being procured, I think that has always been a tall task. Now, having said that, I think the government has now options are limited, because a debt waiver is always going to destroy the credit culture. So the one thing the government can actually look into some sort of an income support scheme for the farmers, and and we also had calculated the cost of the income support for the farmers. So I think that could be one of the options which the government could look into. And in the meanwhile, I think Telangana has successfully implemented the income support scheme. So there are some states where the cost is not on the prohibitive side, so that some of the states could actually also look into that scheme. So some sort of an income support for the farmers at this point of time is extremely essential for the rural demand to come back into the system.
Mr. Pant, so you heard Mr. Ghosh say that loan waivers are not good. I mean, they're the worst option in that sense, is what he's saying. But the election results show us that political parties will believe that is the way to win elections, and that may get, that sense may get entrenched that waivers do work, at least in winning elections in the short term. Do you agree we will see a lot more? What's your? Have you done any numbers in terms of what this may rise to? What could be the impact? And would it really help these loan waivers? Does it really help consumption?
Prashant, the fear are we may see competitive populism in run up to the election in next 5.5 months, or up to May. On the face of it, when we had according to that point of time and estimate in 2008 or 9 before general election, the farm debt waiver, we thought that everything is done, it's down and dusted, it's a one-time event, we are not going to see it. But we are seeing it from last year and a half. Many states have announced it. See, the whole issue is where we are struggling in, like low CPI is music to the ears of government, policymakers, consumers in general also. But spare a thought what will be the farmers' income, how they will be growing. And mind you, this latest number is coming at a time after MSP hike. Soumya is right. The amount of procurement is a smaller quantity out of the production. The farm debt waiver are not going to benefit farmers, not going to benefit governments. Now I am saying the government, it is a government as general, not an individual party or anyone. So it is something similar to a patient is suffering from pain because of cancer, and we are giving him a Brufen to give some pain relief. As long as we are not able to take or we are not able to address the broader issues which Indian agriculture is facing, small land holding size, farmer producing most of it.
These are fundamental.
They will not help. They will not help.
Okay. One last question, Mr. Ghosh, to you, and briefly. Not whether it is right or wrong, but do you think it will happen? I'm talking about transfer of a significant portion of RBI's reserves to the government, which could be used to make up for GST shortfall. A portion of it could be used for stimulus. But should we be prepared for something like that? or that is out of the question? What's your sense?
No, I don't want to comment on that because this is a matter which is under consideration. So it's basically, I think a committee will be set up and which will look into all the nitty-gritties of this one. But as of now, I think growth considerations should now take center stage because of the global uncertainty and also because of the, particularly because of the global uncertainty, we need to have a policy which could actually also support growth. So that, I think, should be the prime consideration as of now.
Okay, Mr. Pant, just before we wrap up this conversation, in a one-word answer, what's your estimate for the fiscal deficit for FY19?
We are looking at third consecutive year of our estimates suggest third consecutive year of 3.5. However, government can still do lesser than that, and there are options available by rolling over the expenditure, RBI giving a higher amount of interim dividend, a cut in capital expenditure because the pressure is coming both from revenue and expenditure side.
All right, Mr. Pant as well as Soumya, thank you very much for joining in and discussing